Hi YouTube, please give me a moment while I connect to Facebook. Hi everybody, welcome to the Strategic Swing Trader weekly broadcast. I am Sami Abu Saad, Director of Education at T3 Live. I hope you are doing well. We're going to be going over the market and going over some amazing swing ideas for next week. But before we do so, as always, a standard required disclaimer to let you know that trading is risky and that whatever we discuss is for educational purposes only. If you'd like to download a copy of my free ebook, link for that is in the description. And if you have any questions for us, reach out by emailing info@t3live.com. And lastly, please, if you find benefit in today's video, be sure to hit the like button. That helps us out a bunch. All right, with that out of the way, let's jump in. First, we'll go over the market and then we'll go over the ideas that I have for you. So when we say the market, it depends on what index we're using. If you're using the Qs, which tracks the top 100 companies in the NASDAQ. Now, you might say, well, that's not representative of the NASDAQ. It is, because the top 100 companies, the market cap for those is like 99% of the entire NASDAQ. So that's the NASDAQ, basically, the Qs. The SPY is the S&P 500, the top 500 companies in the country. And the IWM tracks the small cap. So, when we say the market, it really depends, because the Qs is very, very bullish. Above the rising 20, above the 200, had a wide range bar, not last week, but the week before. It would have been perfect if we had gotten another green bar last week, if we had gotten a nice solid green bar like so. But we didn't. We barely got a green bar. So the Qs is bullish, but the SPY is bearish, and as you can see, you can almost draw a trend line probably in a downtrend, right? In fact, if we break under just Friday's low, that should trigger the sell setup. That should trigger a sell-off. So I don't know what the bias should be for next week. I'm actually kind of leaning towards going with the SPY for next week as opposed to the Qs. Because if the SPY starts dropping, that means there's something going on with the banks, right? The banks are dropping, probably. And the other thing is, we definitely have a sell setup pattern if we take out and close below Friday's low. So that's why it's giving me, the SPY is the only index that gives me a clear line in the sand. Okay? Which is Friday's low. So we should not break and close below 389.40. If we do, I'm going to be bearish. Okay? The Qs, it'll be hard to be bearish on it, but what I could say is we're a little extended. We could see the Qs pull back. Okay? And then the IWM is at support, but all out bearish and has room to this year's low. So completely bearish. So there you go. The Qs is bullish, the NASDAQ is bullish, the SPY is neutral to slightly bearish, and the IWM is all out bearish. Here's the weekly chart on the IWM. That doesn't look very good, does it? But we're at support also. And here's the SPY, neutral, I would say. Neutral to slightly bearish, and the Qs is mildly bullish on the weekly, I would say. So I'm going with the SPY because it's the only one that has, again, what I would say, a clear line in the sand that's, that can quickly pivot you, or give you like that you can pivot quickly using just a break of Friday's low without having to wait for a big crash before you know whether you should be bearish or not. You see what I mean? So that's why I'm going with the SPY. And for now, my bias for next week will be bullish unless we break and close under the SPAR's low. Okay? Because I think the banks, especially obviously the regional, might have bottomed. We just need to take out 765. Really, we need to take out 802 and close above it. That's what we need to do. In fact, the BNKU looks better, but that's the medium banks, the medium-sized banks. And the entry for it would be over 1437. We need to close above that bar. a stop under 13.37, so exactly $1. So those two are actually on the IDS list. So let's go ahead and start from the top. The ALDX is a 1, 2, 3. It's okay to do a 1, 2, 3 pattern. A 1, 2, 3 pattern is when you have a breakout, and then after the breakout bar, you get a narrow range bar, just like we have here. It's best to do it on the after one breakout bar. In this case, we have two big green bars and then a 1, 2, 3. But I don't mind it that much because I like the hourly base. So long over the base, stop under it. Okay, on the ALDX over 920, stop under 865. The AQN, I like it quite a bit on the weekly chart because we have a weekly sell setup failure. A sell setup failure means, this is a sell setup that worked. This sell setup tried, we came in and then we failed. So it looks higher over 805 with a stop under 729. So it's a big stop, target at least $10 or so, okay? On the AQN, one can use a tighter stop off the hourly chart, and that would be 765 over here. So, okay, if you want a tighter stop, use the hourly. If you want a wider stop, use the weekly, which is 728, okay? On the AQN, BNKU and the DPST, I just mentioned them. I like the BNKU slightly more, but they will both either work or both fail, okay? CWEB is Chinese. Is the double leveraged ETF for the China technology stocks. The YINN is the triple leveraged FXI, okay? So they both look alike and they both have about the same volatility. I got into the YINN on this day. I'll show you because it was an anticipatory weekly buy setup basically. The weekly chart was doing a pullback right here, and I got in it before it even triggered over here, but it ended up failing. So got in it on this day and then rode it up and then rode it back down, so unfortunately. And now I got back in it once it took out this bar's high, okay, again as an anticipatory bottom. This was hard, but I'm in it already and I still like it higher. I'm only mentioning it to say, if this is truly the bottom, then it should retest the prior highs. That's will be a huge move. So I like the YINN and I like the CWEB, okay? Both look alike, just like the BNKU and the DPST look alike. The next on the list would be the IAG, and that's gold. There's a bunch of gold stocks. In fact, I have it looks like I have three. The IAG, the NEM, those are gold miners, and the RGLD. They all have a similar weekly chart. It's a buy setup when you have a pullback, and then it triggered already last week or the week before, and then 1, 2, 3. So over 128.09 by 120.50. But that's a big stop. So that's the issue with it on the RGLD. The IAG is a much tighter stop, which is why I like it more. So I like it over 258, stop under 241. That's only 20 cents, not even 20 cents. So this is tighter stop. Let's take a look at the RGLD. Oh, that's the one I just went over. Let's take a look at the NEM. NEM is a tighter stop than the RGLD. It's weaker than the RGLD, but tighter stop. Same exact entry and stop over here. Stop right there. Now, the issue with gold, in my opinion, is the target is limited. That's your target. Now, if you say, no, the crisis in the banking sector is just starting, and I'd like to get in gold and hold it forever, or hold it for a long time, hold it to $70 on the NEM, then this would have plenty of reward to risk. The reward to risk ratio will be very high if you actually think gold is higher long term, not just short term. Okay? So we went over 3 gold stocks here. LPRO, back to the daily chart, which is what the main time frame for finding and playing swing trades. Actually, LPRO is off the weekly chart. It's a daily based breakout, but I like it mostly on the weekly. This is a pattern that I've traded before where the stock is down so much, then tries to go higher, breaks down, and then the breakdown bar, you get a base, it pops a little bit, you get a base, and then it bottoms. So the breakdown bar produces no follow through to the downside. I'm not saying this is going to be the case for sure here because it's a difficult pattern, but I definitely like it over 743 with a stop under 634. So it's about $1.10 long. Target 1 would be about $10, so it has, you know, has a good amount of room. Maybe target 2 would be up here around 11 or 12. Okay, on the LPRO we already went over the NEM. ORIC is a beautiful weekly buy setup, but not a tight stop. So long over 535, really the stop should be under 409. So it's $1.15, about $1.15. Let's see if we can use the hourly chart. You can, it's just not, there's not a very clear place to put the stop other than maybe 460, but I would rather put it under 409. That would be the safest as a weekly buy setup on the ORIC. We went over RGLD, we went over YINN already. So let's now go over the shorts. I like the CTIC maybe the most. A little bit sloppy, like I'm seeing a lot of tails. I don't like to see a lot of tails because tails mean what tails mean is uncertainty or indecision. You know, there isn't one group that's totally in control. When there's one group in control, you get something like the AQN where, you know, this is when you know who's in control for sure. You don't see a lot of tails, do you? This is when you know who's in control for sure. No tails. So the CTIC has a lot of tails, but what I like about it is over here, a lot of tails. What I like about it is the weekly chart. Notice how a couple weeks ago it gapped down, and it's a breakaway gap, a breakdown gap. So it broke under the base, and now it's basing. So short, stop, and target is $3. So it looks good on the weekly time frame for sure. LPSN, I actually tried it long, but it didn't work. Stupid me. On this pop here, it was an aggressive entry, but again didn't work, and now it's coming back down and it looks lower. So short under the base, stop above it. I don't love it, but it looks okay. Let's take a look. This reminds me of the XMTR, which is an open position already. You see how it gapped down. Sometimes when they gap down, they can also go back up. I do that often, play them, fade the gap basically. But in this case, it's set up short, play the short. The same with I, which is already an open position also. Same thing. Now, we don't have as good of a pattern on the LPSN, and I'm planning to pass on it, to tell you the truth, but I'm going to watch it. If the pattern tightens up on the hourly chart, I might give it a shot. Of course, if you're a subscriber to the Strategic Swing Trader newsletter, you'll be the first to know. I'll send you an alert, or it'll be in the newsletter. MOV gapped down on Thursday and put in, it's not a narrow range bar, but a narrow body bar, meaning the range of the bar is normal range. The body is narrow. So I like it short. It gapped down under an entire year or two worth of trading. And so every single person that bought it in the last, I don't know, year and a half, every single person is now underwater. So if it breaks down, it could really get going. And I like it lower to about $22, $21.50. So it has a good amount of room. Short under Friday's low, stop above Friday's high. So that would be this bar's low, $27. Stop over $28.25. Target, as I showed you, is about $21.50, $22. MQ is also like a 1, 2, 3. I like it on the hourly chart. One more bar, one more narrow range bar on the daily, or another, you know, basically base on the hourly chart, and I'll definitely play it. But for now, I'm planning to pass on it. I wanted to mention it because it's one of the ones that I'm going to be watching closely. So the MQ would be under 346, stop over 362, and that's it. I only have 4 items on my list. There's a few more, but I try to keep, I try to mention the ones that I think are ready, like the TRUP, similar to the MQ, gapped under years worth of trading. But what I don't like about it is this bar is not within in the bottom third of that bar's range. It's way below it, and the stock dropped a lot already, so I don't think it's ready. Otherwise, short under this bar's low, stop above it. Okay, and there's more, but like I said, for now, I think these are the ones that look the most ready, especially that CTIC and maybe the MQ. All right. Well, that will do it for this week. I hope you have a great weekend. And again, if you have any questions, email us, info@t3live.com. Check out the links in the description. And best of luck with your trading next week. Happy trading, everybody. Take care.